Good day everyone, my name is Chin Wei, bracket number 271639. Today our Group A, we're going to share the Financial Analysis 2020 for Yon Mentor Group Berhad and Entex Group Berhad. These are the members of Group A. Yon Mentor Group Berhad and Entex Group Berhad are the company under the sector of industrial products and service that listed in the main market of Bursa Malaysia. Yon Mentor Group Berhad is a manufacturing company that located in Penang, Malaysia. From 2003 to 2004, it changed from the private limited company to public limited company with its name Yon Cap Corporation. From 2005, its name changed to Yon Mentor Group Berhad. This company is not only play as the provider of enterprise solution and shop floor automation software, it also involved in manufacturing the world-class metalwork and industrial process machinery and equipment, coils and high-quality secondary flat steel products that is globally accepted, also the steel storage system that is easy assembled and with assured qualities. For Entex Group Berhad, this is the company that located in Selangor, Malaysia. In this company, there are 4 aspects. First is distribution and wholesale aspect. In this aspect, it involves Entex Marketing Sdn Berhad that in charge of supplies, major building and construction. Also, Entex Hub Trading Sdn Berhad that provide a one-stop distribution hubs. Next is the Entex Taknai Iron Pipe Industrial Sdn Berhad that under the aspect of manufacturing in this company. Furthermore, under the property development aspect, one of the division is Entex Property Sdn Berhad, and this division is responsible in establishing essential new standard for construction and project management. Lastly, we have the hospitality aspect in this company. In this aspect, it involves the Entex Ratios and Sdn Berhad that are going to manage 4 hotels. That's all from my part, and my group member will continue for the presentation. Thank you.
Good morning, Doctor. My name is JENNIS. Membership number is 277059. Today, I'm going to talk about calculation financial ratio for Entex Group Berhad in 2020. The first financial ratio we want to calculate for this company is liquidity ratios, which includes the current ratio and quick ratio. For current ratio, we use the amount of current assets, which is 916,246,000 ringgit, divided by the current liabilities, which is 563,393,000 ringgit. Then we can get the current ratio of Entex Group Berhad in 2020 is 1.63 to 1. This ratio means that Entex Group Berhad obtained 1 ringgit and 63 cents current assets for every 1 ringgit current liabilities. For quick ratio, the calculation formula is using the amount of current assets minus the amount of inventory, which is 445,829,000 ringgit first, then divided by the current liabilities, then we can get the quick ratio is 0.48 to 1. This ratio less than 1 means that this company is not able to satisfy its current liabilities because for every 1 ringgit of current liabilities, there will be 84 cents to pay for it. The second financial ratio we want to calculate is activity ratios, which is include the inventory turnover, total asset turnover, and account receivable turnover. For inventory turnover, the formula is using the amount of cost of goods sold divided by the average inventory. To calculate the amount of average inventory, we can use the beginning inventory plus the ending inventory, then divide by 2. After that, we can get the inventory turnover of Entex Group Berhad in 2020 is 1.96 to 1. This ratio means that the inventory has been sold out 1.96 times in the financial period. For calculation the total assets turnover, we use the amount of net sales, which is 989,614,000 ringgit divided by the amount of average total assets. Then we can get the total assets turnover is 0.75 times. This ratio means that Entex Group Berhad generated 75 cents in the sales for every 1 ringgit in total assets. At the same time, we can use the amount of net sales divided by the amount of average trade receivables. Then, we can get the ratio of account receivable turnovers is 2.99 in 2020. It means that Entex Group Berhad collect their receivable about 2.99 times within a year. Okay, the third financial ratio that we want to count is probability ratios, which includes the profit margin on sales and return on assets. For profit margin on sales, it uses the amount of net income, which is 15,999,000 ringgit divided by the amount of net sales. After calculation, the profit margin on sales for this company in 2020 is 1.62%. This data indicates that they made a profit of 1 ringgit and 62 cents for every 1 ringgit sales. For return on assets, it uses the amount of net income divided by the amount of average total assets. Then, we can get the return on assets for this company is 1.22%. This positive percentage of return on assets shows that the company has earned the 1.22 cents per 1 ringgit it has in assets in the same financial period. The last financial ratio for Entex Group Berhad that we want to calculate is leverage ratios, which includes the debt to assets ratio and debt to equity ratio. For debt to assets ratio, The formula is using the amount of total liabilities divided by the amount of total assets. After calculation, we can get the debt to assets ratio for NTEX Group Berhad in 2020 is 0.47 to 1. This ratio shows that the company has 47% of the assets are being financed by the creditors. Lastly, we also use the amount of total debt divided by the amount of total equity to find the debt to equity ratios of NTEX Group Berhad in 2020, which is 0.59 to 1. This ratio shows that the creditors have provided 59 cents for each 1 ringgit provided by the stockholders. So that's all for me. Thank you.
Is LIAN. My matrix number is 2x7646. Today I'm going to discuss the calculation financial ratio for Elemental Group Berhad. Let's begin with liquidity ratio. They have two elements inside, which is current ratio and also quick ratio. For the current ratio, calculate with the current asset 225,543,280 and the current liability 198,511,944. We have the current ratio 1.14 to 1. This shows that the company has 1 ringgit 40 cents current asset for every 1 current liability. The next one is quick ratio. With the same current asset minus inventory 121,041,945 and the same liability, we have the quick ratio as 0.53 to 1. This shows that every 1 ringgit of current liability, they will only have 0.53 to pay for it. Now moving on to activity ratio. They have 3 elements inside, which is inventory turnover, total asset turnover, so account receivable turnover. For the inventory turnover, we have cost of goods sold 104,652,842 and also the beginning inventory 94,321,519 and the ending inventory 121,041,645. We have the inventory turnover 0.97 to 1. This indicated that the inventory of Elemental Group has been shown out 0.97 times in the financial period. The next one is total asset turnover with the net sales 131,750,584 and the beginning asset 421,952,410 and also the ending asset 502,157,842. The total asset turnover ratio of Elemental Group Berhad is 0.29 times. Elemental Group Berhad generated 0.29 in their sales for every 1 ringgit in total asset. The third one is account receivable turnover with the step net sales and the beginning trade receivable 46,383,125 and ending trade receivable 43,260,922. We will have the account receivable turnover as 3.03 in 2020. This shows that Elemental Group had collected receivable about 3.03 times in a year. Now we are move on to profitability ratio. They have 2 elements inside, which is profit margin on sales and also return on asset. The first one is profit margin on sales. Profit margin on sales calculate with the net income divided with the net sales. So the profit margin on sales for Elemental Group Berhad in 2020 is 0.0246. This shows that Elemental Group Berhad earned 2 ringgit 46 cents for every 1 ringgit. The next one is return on asset. With the net income 3,342,700, beginning asset 427,952,410, and also the ending asset 502,157,842. We will have the return on asset is 0.01. The positive percentage of return of asset shows the company earned 0.01 cent per 1 ringgit asset in the same financial period. Now we are moving to the last part, which is leverage ratio. They have 2 elements inside, which is debt to asset ratio and also debt to equity ratio. Debt to asset ratio calculated with the total liability 248,888,673 and the total asset 502,157,842. We will have the 0.50 for the leverage ratio in 2020. This shows 50% of the asset is being financed by the creditor. The last one is debt to equity ratio. With the total debt 225,632,499 and the total equity 253,269,169, the debt of equity ratio of Elemental Group Berhad is 0.89 to 1. This means the creditor has provided 0.89 for each 1 ringgit provided by the stockholder. Thank you.
Assalamualaikum and hi everyone. My name is MARYAMA binti SHOLEH with matric number 289921. Today I will present about ratio comparison between NTEX Group Berhad and Elemental Group Berhad. The descriptive for liquidity ratio are shown in figure 1. From figure 1, it is observed that there are two types of liquidity ratio, which are current ratio and quick ratio. For current ratio between Antex Group Berhad and Ion Metal Group Berhad, Antex Group Berhad got the highest with 1.63, while for Ion Metal Group Berhad only 1.14. Antex Group Berhad also has the highest ratio for quick ratio with 0.83, while Ion Metal Group Berhad only 0.53. For current ratio, it is to measure the ability of an entity to repay short-term debt. Potential creditors use this ratio to decide whether to provide short-term loans or not. Antex Group Berhad with higher current ratio indicated that their company is more capable in paying off their current liabilities. Other than that, quick ratio is to measure an entity's ability to pay their short-term obligations without selling inventory or obtain any additional funds. A quick ratio is more than 1 means that the company has quick assets sufficient to cover outstanding liabilities. In this observation, as Antex Group Berhad achieved a higher quick ratio with 0.83, it shows that the company has the better financial health and able to solve their debt more quickly without selling any inventories. There are three ratios under activity ratio, which are inventory turnover ratio, total assets turnover ratio, and accounts receivable turnover ratio. Antex Group Berhad has the highest inventory turnover ratio, which is 1.96 times a year, then Ion Metal Group Berhad only 0.97 times a year. For total assets turnover ratio, shows a slight difference between Antex Group Berhad and Ion Metal Group Berhad, which is 0.75 and 0.29 respectively. The account receivable turnover ratio for Antex Group Berhad is 2.99 times a year, that lower than Ion Metal Group Berhad, which is 3.03 times a year. There are three ratios under activity ratio, which are inventory turnover ratio, total assets turnover ratio, and accounts receivable turnover ratio. An activity ratio is a financial indicator that shows how effectively a company is generating revenue and cash from its balance sheet assets. For inventory turnover, the higher ratio obtained by Antex Group Berhad indicated that the company is selling their inventory more quickly, even more frequent in replacing their inventory than Ion Metal Group Berhad. The total asset turnover ratio shows a slight difference between Ion Metal Group Berhad and Antex Group Berhad. However, the result still shows that Antex Group Berhad has a better performance in making a sale with its asset, as for its every 1 ringgit assets, there are 0.46 ringgit Malaysia higher than Ion Metal Group Berhad. Account receivable turnover, Ion Metal Group Berhad settled the liabilities more quickly. This indicated that the clients of Ion Metal Group Berhad settled the liabilities more quickly, and this also contribute in increase the positive cash flow of Ion Metal Group Berhad.
Assalamualaikum warahmatullahi wabarakatuh. My name is SYAFIQAH binti NAZRI with metric number 287880. Today I will talk about profitability ratio and leverage ratio between Ion Metal Group Berhad and Antex Group Berhad. The figure above show the profitability ratio between Antex Group Berhad and Ion Metal Group Berhad. There are two ratios under profitability ratio, which are return in asset and profit margin on sale. According to the graph above, the return on asset for Ion Metal Group Berhad and Antex Group Berhad in year 2020 was 0.72% and 1.22% respectively. Antex Group Berhad displayed the highest percentage than Ion Metal Group Berhad. This means that both companies have shown how well their companies have used their asset to generate profit. However, based on the graph above, Antex Group Berhad has done a good job determining the profitability and efficiency than Ion Metal Group Berhad of their businesses. Next, the profit margin on sale for Antex Group Berhad was 1.62%, while Ion Metal Group Berhad was 2.46% in year 2020. Ion Metal Group Berhad reflect the company's ability to make a profit higher than Antex Group Berhad. Using the ratio, we can measure the capabilities of Antex Group Berhad and Ion Metal Group Berhad in terms of managing and controlling the company's expenses, which have a direct impact on the company's profitability. Okay, now let's move to the leverage ratio between Antex Group Berhad and Ion Metal Group Berhad. There are two ratios under leverage ratio, which are debt to equity ratio and debt to asset ratio. According to the graph above, it results that Ion Metal Group Berhad got the highest debt to equity ratio, which is 0.89 compared to Antex Group Berhad that only with 0.59. This is also indicated that Ion Metal Group Berhad have 30% of debt more than Antex Group Berhad for every 1 ringgit Malaysia in equity. Ion Metal Group Berhad with higher debt to equity ratio indicates that the company has been aggressive in financing its growth with debt. Also, compared to Antex Group Berhad, Ion Metal Group Berhad might has a greater potential for financial hardship if their income does not exceed the cost of borrowed fund. Next, the debt to asset ratio represented the company's ability to own debt and increase debt if necessary for their business operation. Based on the ratio observation, Oriental Group Berhad has the higher ratio with 0.5 than Entex Group Berhad with 0.47. The less than 1 debt to asset ratio of both companies, meaning that they own more asset than liabilities and able to meet its obligation by selling its asset. Compared to Oriental Group Berhad, Entex Group Berhad that obtained lower ratio indicated that the risk of their company is lower. That's all. Thank you.